Another low for the Indian rupee. It continues to weaken against the greenback. It's happening for the sixth straight session. The Indian rupee closing trade at 78.97 to the US dollar. It's just shy of breaching that 79 level mark, inching closer now to the 80 to the dollar mark. In fact, if you look at the month of June, the Indian currency is down about 1.5%, and it's down more than 6% if you look at it since the month of January this year. So let's put this in perspective and what this really means. Jamal Mecklai, CEO at Mecklai Financial Services, joining us on the show. Great to have you with us again, Mr. Mecklai. Clearly, we have concerns. We have concerns on growth. We have concerns on portfolio outflows. High global crude prices, we've been discussing that, though there is some cooling off there. And of course, we really can't take our eyes off the price rise that we've seen in recent times. So all these factors, they've weighed in on the Indian currency. And now we are seeing the 79 to the dollar, that psychological barrier getting breached. Do you think the RBI is doing enough, Mr. Mecklai, to stem the slide of the Indian rupee, or could it do more?
Well, I think RBI is doing a lot, right? I mean, their reserves are now below 600 billion. The fact is that, when the wind is really, when you're in a storm, right? And let's face it, globally, this is a storm. I've been tracking the Dow Jones current chart, pasted on top of the chart in 2008. And it's almost identical, right? Now, we've been falling for about 6-7 months. It fell for 18 months at the time. The wind is blowing. Russia has made things crazy. Oil prices don't look like they're going to come down. I don't think they're going to go up to like 150, 200. They might, but it doesn't look like they're going to come down. So it's what they say, a perfect storm. Right? So the storm is blowing. RBI is trying its best. It's doing well, but I don't know how long they will be able to hold out. And then again, there is and of course the real driver again is the Fed. Finally, they're waking up. And they're raising interest rates, right?
But
if they're
Mr. Mecklai,
6-8 months ago, it wouldn't be so.
Yeah, but the reason why I asked about the RBI and its moves is that the fear is that if they don't do enough, there may be further flight of capital, and that's something nobody would really want, and least of all the RBI. Which are the most effective tools before the RBI at this point to control the drop of the Indian rupee against the US dollar? Because yes, forward market intervention, spot market intervention, all of that is happening. But where is the most firepower that the RBI could use, considering the foreign currency reserves, like you mentioned, they're still quite strong. We've seen some depletion, but they're still over $590 billion.
See, I don't think that the rupee falling is driving the outflows, right? Outflows are being driven by the fact that US interest rates are going up. And the concern is they're going to continue to go up, right? So, and as a result, the dollar is strengthening and strengthening and strengthening. So I don't know what RBI can do to control that, all right? I think they just really have to play defense and hold on as tight as they can and pray, because one of the good things about markets is they never go in one direction forever. Right? So at some point, if you look at the global market, right, you will see a correction in equities. What we're really looking for is a correction in the dollar, which will come, make no mistake. But whether it will be tomorrow or after 2 weeks or after 20 weeks, and where the rupee will reach before then, we don't know. But it's just like, so you're just like I said, you're in a storm. In a storm, what do? I mean, you just hold on tight.
Yeah, but the storm,
anything new.
But the storm also means, Mr. Mecklai, that retail inflation currently has gone beyond the RBI's comfort zone, which was between 2 and 6%. Our dependence on imports puts further focus on sectors, FMCG, metals, petrol, several other sectors. And there is the widening trade and current account deficit. There are reports that the government is closely scrutinizing imports and will try and control imports to help the cause of the rupee and stop the slide. Is that going to be effective in your opinion?
See, I don't think we're in that sort of crisis situation yet, to where they should clamp down on imports. Maybe I'm wrong. But the reality is that, inflation is true globally. It's like I said, the situation is out of control, right? Now, whether it's sort of a crisis where you need to batten down the hatches on containing imports, etc., etc., I don't know. I mean, so look, so let us say the rupee continues to fall. I mean, it's not the end of the world, right? I mean, you pointed out, you said earlier that the rupee in June has fallen 1.5%. Now, I mean, the Turkish lira falls by 15%. I mean, RBI has been doing a great job in
Mr.
terms
Mecklai,
of.
I take that point, but I
There
want to
are.
ask you, would you
One second,
reconsider
one second.
asset allocation, in your opinion, this time? Perhaps concentrate on export-oriented sectors. Is it time at least to do that? If the rupee is going to slide further, how would you rejig your asset allocation? Would you concentrate on, say, gold? Of course, gold is also an import item, which is a trouble spot too. But would you yourself do that?
You mean in terms of equities?
In terms of equities, in terms of how you're spreading your asset allocation, that strategy that you would have in these times where inflation is going up, where we are seeing imports in a troubled spot, anything and everything to do with a sliding currency, is it time to relook how you approach your portfolio?
See, let me tell you, when the sea, the market is like the monsoon sea, right? And you don't go into the monsoon sea. You go in a little bit in May, a little bit in June. In July, if you go into the market, you're crazy. At this point, to fool with asset allocation, just sit tight, baby. Because nobody knows what is going to happen. Everything's crazy. Everyone also knows things are going to hell, and there will be a correction. When the correction will come, you can breathe easy, but you don't go into the market when things are crazy. I mean, that is a fundamental law.
Yes.
Okay. Let's say you've already extended yourself. I've got money in the market.
Right.
The equity market. I'm not even thinking about it. Of course, it's going down.
Yes, these are troubling times, but this would kind of sometimes force you into action, and you might think that, yes, you need to rejig, but this is sage advice that you need to kind of sit back, wait and watch, because it's not the end of the world. It's a storm, and perhaps we have to wait for the storm to pass by. Always great chatting with you, Mr. Mecklai. Thanks very much for joining us with your perspective on the falling rupee, and we'll reconnect with you in the near future. For the moment, we're taking a small break on this edition of India